Welcome to Markets Now. I'm Michelle Rook with Darren Frye, Water Street Solutions. Grains ending mostly higher on Friday with the livestock futures mixed. Cattle futures actually saw a little bit of a setback, which we'll talk
Yep.
about in a moment. So, Darren, let's talk about the grain complex. We did have the WASD report out at
Yep.
11 o'clock on Friday. Not a lot of fodder there in terms of domestic numbers. And really, we didn't get much of a revision from USD and South American numbers, which was probably a little disappointing, wasn't it?
Yeah, it sure was. I think all of us were looking for them to come down on the Brazilian crop, maybe 4 or 5 million metric tons, and they came down one. So that wasn't near what the trade was expecting. And I thought initially, the numbers looked, maybe neutral to negative, but the market really never sold off. And actually, shortly after the report numbers were out, the market started firming, and we had some really, really good closes for the day, but also for weekly closes.
Yeah, we'll talk about that in a moment, but I want to dig into something that might have gotten overlooked in the WASD, and that is the China soybean import numbers were actually raised for 2 marketing years by USDA, right?
Yeah, they were. They went up on last year's and this year's, and I think that's what helped to decrease the world ending stocks as well. About 1 million metric tons in wheat, but then about two in soybeans, and about 2.5 in corn. But they were really affecting those imports that China's taken in the soybean area. Now we haven't seen that come to our market, but we know they've been really hungry for Brazilian product, and that's both been on the beans and on the corn side. They were real aggressive buyers of corn here over the last 3 or 4 months.
Yeah. And as you pointed out, weekly closes were higher in all accounts, with the exception of Chicago wheat.
Yep.
And we closed above 20-day moving averages in most of these markets. So, is this market finally starting to turn?
Yeah, it seems like it. After weeks and weeks and weeks of being down as the funds had their way with the market and added to their short position. I mean, this is the first week that we can say we got above the 20-day moving average on the daily chart. We've had good weekly closes. And really, it wasn't a bullish report. It was kind of a neutral, a bearish report. There are a few things in it that were supportive, like what you mentioned about importing more soybeans for China. And certainly that was a bright spot. But when you take a look at what the production numbers for Brazil and Argentina were, there was nothing bullish there. And obviously, they didn't change anything in the domestic balance sheets, with the exception of they added some wheat ending stocks because they reduced exports. So there just wasn't anything, bullish. And yet the market really, really rallied.
It did. And now we'll be watching for CONAB's numbers next week for some confirmation on Brazilian production. But I got to ask you, after you have a higher week like this and just about everything, the question is, can we build on it? And what, in your mind, are the funds looking at here, either from a technical standpoint or another catalyst to keep them covering this massive short position now?
Well, they follow, momentum and moving averages. They'll look at certain price levels, and this is a first nick to their position. There's no question. We probably will see them taper a little bit more here and just see where these markets can go. But I think it's going to be important for corn in versus the May contract to push over 460. We got to get above there with some exuberance. I think soybeans need to push over 12, more importantly, 1225 in May. And if we do that, that will spell trouble for the funds. That'll get them above too many other moving averages, and it'll say momentum strong to the upside. And maybe we can't figure out what's driving it. But the bottom line is price action is king, and that'll make them pretty nervous. So I would say if we add to this as we start a new week and we see strength build into midweek, first few days of this new month have been good for a turnaround. And if we add to it, I think the funds could be short covering even more.
Yeah, especially as you go into the end of a quarter and we're getting into that prospective plantings report at the end of the month with some uncertainty there.
Yeah, that's exactly right. And when you look at what rice has done and what cotton prices have done, I know cotton was down today, kind of had a bad day, but it was limit up yesterday and limit down today, and so I think cotton has stolen some acres from corn and soybeans in the mid South. We know that guys up in North Dakota and parts of Minnesota, up in that area, the upper Midwest and Northwest, are talking about some specialty crops, reducing acres a little bit here or there, because corn really has discouraged maybe some acres, not only in South America, safrina's got planted, but also as guys come into this spring, they're looking at different crops to grow, sharpen their pencil, and deciding whether they're going to cut back on corn acres or not.
Okay. Wheat market, a couple things we want to talk about there. We did see a slight adjustment upward in the U.S. ending stocks because of a lowering of exports. And as long as we're talking about exports, of course, two big announcements of China cancellations. Market, has it worked all of that in or priced all that in?
It's probably in the process of pricing it in. I don't know if they'll have more cancellations. Obviously, this was wheat they booked at higher prices. Argentina's cheaper than us, and French wheat origin can be a little bit cheaper as well. And so, this is some of the games they play. It's really hard to know what they're going to do, if they're going to cancel more, or if they're going to have to rebook. But they certainly did throw a curveball at the market, and obviously, Chicago wheat's taken it on the chin compared to the other two classes.
Absolutely. We did see the dollar index down pretty sharply today, which may have helped wheat, maybe all the grains, in fact. But the dollar, talk about what's going on with that. Is it having a sharp breakout to the downside and what's triggering it?
I don't think it can. You can say it's broken out quite yet. I mean, the action is negative. If you're a bear, you want it to continue. If you're a bull, you want it to support here. I don't think we've gone far enough to say it's over, but obviously, the direction of the dollar will have a lot to do with our commodity prices. So the dollar down today, while some of these other markets did some short covering, was certainly a help. But markets are really just all over the place. You know, you look at gold, you look at silver, you look at Bitcoin, you look at what bonds are doing, and how the dollar is fading back after some numbers came out this morning on the non-farm payroll, and you just you have to say to yourself, man, there's volatility in these markets. Anything can happen, and obviously the dollar going down could be really supportive to all of our exportable products: corn, beans, wheat, the things that we grow, and the things we like to appreciate in price.
We are also watching the stock market because it impacts money flow. And so, do you think it's putting in a high or has it?
I don't think so. I was not impressed with the stock market back in August, and then as time rolled forward, I'm thinking, man, this thing's going to keep going, and it has. And I wouldn't be one to step in front of it or call a top. I think you can maybe go up into the May timeframe. We'll see what happens then. But I kind of look at Bitcoin. Bitcoin made another new high today, and as long as Bitcoin's going up, and I think it's got more in it to the upside, there's liquidity out here, and you're just not going to be able to call a top in the stock market. Sure, we had a down day on Friday here, but it's just one day, and we were making highs yesterday. So this market, I think, has more ups in it, and at least into May, we'll see what happens.
And certainly that is a market that the cattle market closely watches and follows here. Let's talk about today's action, though. Despite going up into new highs for the move, maybe even contract highs in some of those 25 contracts with higher cash, higher cutouts, we did have reversal action. Are you concerned about it?
Well, you always got to be concerned about a reversal, and we were into new highs and we closed poorly. Back into the support zone we broke out of. Sometimes markets have to check that out. I think the action early next week will tell the story. We could go down deeper before we recover, or we could just snap right back and go out the top. But, the Packers have tried hard to slow down the shackle speed, boost the beef, cut the cash, and they haven't been able to break the cash. Cash rose this week, a couple bucks higher than last week, and the beef prices are on the move higher. And as we get into the strong seasonal here through March and April, I think it's going to be hard to hold these cattle down. If the margins are good for the packer, the box beef has been boosted, they're going to have to probably follow with more cash because the numbers just aren't out here.
No doubt. All right. Thanks for joining us, Darren Frye, Water Street Solutions. That is Markets Now.